Hi guys, welcome back to Brovest. Today we'll be talking about Tesla stock. The shares are down in the pre-market after reporting the quarterly earnings report. We'll look at some of the analyst commentary regarding the Tesla stock and what they reported in their earnings. So let's go.
Of Deepwater Asset Management for more on Tesla. We just had the headline about robotaxi, Gene, and also there's another one saying that they expect Roadster production to start next year. What do you make of all this?
Well, I make of it, Melissa, is I think that the stock has continued to slip in the after hours as soon as Elon kind of wrapped up his first 10 minutes of comments. And I think investors were hoping for him to say something more optimistic. You mentioned a couple things there, but that doesn't really change the trajectory. That still the substance of the excitement of the story is probably a year plus away. And so I think all of those are good around just check the boxes, but those boxes don't start getting checked for some time. And I think that's probably why we continue to see a little bit of slippage in the stock.
Why do you think all of a sudden investors really care about a timeline, Gene? I mean, I feel like, we've been thinking about robotaxi a year out, and all of a sudden a year out now is problematic.
Well, it's problematic in the context of what we saw with margins. And since those margins dipped, they did generate more cash. Cash inched up to $31 billion. So they got plenty of cash. But
Talking about having plenty of money, AJ posted on X. Elon asked whether Tesla should invest $5 billion into XAI. Absolutely yes. Tesla currently sits on record high of $31 billion in cash and hardly has any debt. I think last time I checked, they have roughly about $2 billion in debt. After XAI stake acquisition, Tesla would still sit on $26 billion into cash, which is plenty by all global automotive standards. Another big point of view is the $5 billion would be added back within approximately 3 quarters, if not sooner. And what Elon said, should Tesla invest $5 billion XAI? Assuming the valuation sits by several credible outside investors. Broad approval, shareholder vote, all needed. So this is just to test the waters.
Once you start to stress the margins a little bit, it causes investors to want to see more in terms of when this next thing is going to start to hit. And so I think that's kind of elevated some of the anxiety around timing. I'm still in the camp that they're going to deliver on these. They won't deliver it on time, but ultimately no other car company is doing what Tesla's doing. And I think this is still going to move higher.
Gene, so basically you're holding on to the stock for what's going to happen maybe 2 years down the line. I'm just wondering how you think about that in terms of holding on to something that could very well be sort of dead money when you see so many other opportunities. You think of AI as sort of a once-in-a-generation opportunity. I mean, there are other places to put that money.
Indeed, there are other places, but there is no company like Tesla that ultimately is trying to solve these complex problems. I know that other car companies are teasing around the edges, but this company is all in. Call it whatever the market cap is, sub $1 trillion today. You think about the opportunity, what they're doing around automation, around FSD fleets, even what could potentially come out from Optimus. I'm not hanging my hand on Optimus, but Melissa, I think when you think about that, that opportunity sets in front of them, and you think about that there are other companies that are $3 trillion market caps, I think Tesla can be in that league. I know today is not the day to be thinking about this with these ugly margins, but I think that the company is firmly on track with where the world is going, and I think that that's the reason to, in my opinion, that's why I'm holding my shares.
Now let's look at Tesla Q2 earning report. Tesla reports a 45% drop in Q2 profits, with net income falling to $1.47 billion. Despite challenges, revenue rose to 2% to $25.5 billion, mainly driven by energy storage performance and regulatory credits. Financial performance. Tesla reported a significant 45% drop in second quarter profits from 2024, with net income falling to $1.47 billion, well below analyst expectation of $1.9 billion. Despite these challenges, revenue rose to 2% to $25.5 billion, slightly exceeding expectations. Operational cost and margin. Operating expenses rose 39% during the quarter, reaching almost $3 billion. This increase was partly due to restructuring and legal costs associated with company's decision to cut 10% of its workforce in April. Tesla closely watched gross margin fell to 18% in Q2, down from the peak of 29% in Q2 2022. Excluding the record $890 million in regulatory credit revenue, the automotive gross margin would have dropped to 14.6%. Strategic focus on autonomy and robotaxis. Elon Musk has shifted the company focus towards developing autonomous technology and robotics. The unveil of Tesla robotaxi has been postponed from August to October. Now we know the date as October 10th, with Musk claiming that this project could potentially increase Tesla value to $5 trillion. Musk stated that these robots are already performing tasks in Tesla factories. Right now, we've seen them working in battery lines with limited production for consumers to be expected in beginning of 2026.
Joining us now is ARK Invest's Tasha Keeney and Guggenheim's Ron Yovsikov. Ron, I'm going to start with you because we've been teasing it like this, and I think this is correct. It's a bull-bear debate here. I'm going to start with the bear, given the print we just got and some of these key misses, including, as I just mentioned, GAAP gross margin, X credits coming in at 14.6%. You had said to us a couple weeks ago when the robotaxi announcement was pushed to October that the quality of Q2 earnings was going to matter more. Your thoughts today?
Yeah, I mean, I think the key takeaway, looking at the numbers, you mentioned the gross margins, X credits missed, but I think the key takeaway is the second derivative of the business actually isn't improving here. I think there was some debate coming out of 2Q deliveries if the quality of deliveries was good. And the reality is we see with the gross margins, X credits line this quarter missing by quite a bit that Tesla effectively bought a lot of business this quarter. And I don't really see how that changes going forward. We've already seen quite a few new promotions launched to start the third quarter.
Tasha, I want to get your thoughts on these results, especially since I know ARK is a long-term investor in Tesla, and you've come on the show before and laid out the case for autonomous driving and robo-taxis. But even if that is the future, it's arguably years away, so why buy the stock now?
Yeah, so actually, I think, when we're talking about robo-taxis, this is something that will happen, we believe, within the next 5 years. So in fact, our 5-year price target, we think that robo-taxis will contribute over 90% of the enterprise value of Tesla at that point. So I think, I'm looking forward to hearing more detail on the call. What we've been seeing from Tesla is, of course, incremental software updates. They have a latest version of FSD where it's very limited in its release currently, but, they're adding the functionality to take your hands off the wheel. They said in the letter that they expect the take rate of the full self-driving software to increase based on the increased functionality that they see. So I'm looking forward to hearing more about that rollout, because I think to ignore robo-taxis today is a huge mistake with this stock, because ultimately it's an AI play.
As you can see in this post from AJ, Tesla increased total miles ever driven on FSD from around 870 million miles in March to approximately 1.6 billion miles by end of this June. This is an increase of 85%. In other words, over the last 3 months, Tesla owners drove nearly as many FSD miles as over prior 33 months. Holy cow. Now this is crazy. We even got Jim Cramer explaining that Tesla earnings conference call was terrific. Tutorial on autonomy, humanoid robots, batteries are really impressive. Now we are revisiting a post from Dave Lee back in 2022. He explained the 4 S-curves of Tesla. First is EVs. Second is FSD and robotaxis. Third is energy. And fourth is AI robotics. And we are just getting started on this S-curve journeys. As always, despite the recent fluctuations in Tesla stock, the outlook has never been brighter. As we look ahead, Tesla energy margins and the potential for robotaxis next year, and followed by the Optimus the year after, we are setting up for a promising stage of exponential growth ahead. As always, thanks for tuning in today. Have a great day.